Hello, friends, and welcome back to another episode. So, if you haven't heard about the inflation linked Treasury saving bonds offering very high interest rates, you're losing out on the opportunity. October 29th of 2022 was the last day to lock your 9.62% of interest rate for the Treasury Savings I Bond series. The latest news says that the Treasury Department sold a record of nearly $1 billion of Series I Bond on October 29, which was the deadline to lock in the high rates. The reason why Series I Bond has gained this limelight is because the Series I Bond have proven to be the bright spot for investors amid the decline in stock and the bond markets this year. The Series I Bond rates changes twice a year based on inflation. So we are going to go in detail about how these Series I Bond work, what are the different aspects of it, and what are the rates, and where does this fit in. As of November 1, 2022, the latest rates that has been published by Treasury Direct or the Treasury Department is 6.89%. So investors may lock in the new 6.89% rate for 6 months by purchasing the I bond anytime before the end of April 2023. So there are two parts to this rate: a fixed rate which stays the same after purchase, and a variable rate which shifts twice per year based on inflation. Given that 2022 is the year of inflation, this is a great source for you to invest your money in. The Treasury Department announces new rates every May and November. You can purchase the assets online through Treasury Direct. Each individual it's limited to $10,000 per calendar year. If you are using your federal tax refund, you can buy an extra $5,000, but that should be in the paper format, not as an electronic format. Okay, now it's time for us to dig deep into the Series I Bond. Series I Bond protect you from inflation. With an I bond, you earn both a fixed rate of interest and a rate that changes with inflation. It's considered to be nearly a risk-free asset tied to the rate of inflation. As of November 2022, you may not find any other asset that would give you a whopping 9 or 6%. The regular CDs or the fixed rates available outside the market is around 3, and anytime your I bond series rate is greater than 3, better means to park your emergency fund. So as of November 2022 to April 2023, what's the rate of interest that's being offered? Series I saving bond is offered at 6.89%. So first you need to go to treasurydirect.com to go ahead and create an account. Once you have created an account, you should be able to go ahead and buy how much amount that you want to buy for, and you are limited to $10,000 per individual for a single year. Now let's look at how does an I bond earn interest. Series I bonds earn interest monthly. Interest compounds semi-annually, meaning that every 6 months we apply the bond's interest rate to the new principal value. The new principal is the sum of the prior principal and the interest earned in the previous 6 months. So your bond value grows both because of the interest plus the principal value gets bigger. So let's take an example. Let's say you invested $10,000. So you should be earning 6.92% for next 6 months, so which is 10,000 into 9.62 divided by 12 multiplied by 6 divided by 100, which is $481 after 6 months. So you earn $481 after 6 months because you put $10,000 at 9.62%. It gets compounded every 6 months. That means how much ever you earned as interest during that time period for the last 6 months is added to your principal. So it's 10,000 plus 481, then multiplied by whatever is the next 6 month rate, which is 6.89 divided by 12, and we are compounding it, and this rate of interest lasts for next 6 months. So multiplied by 6. So we are looking around $361 after 6 months. So after you investing $10,000 today, after 1 year, you will have $842 as your interest earned. That's a whopping 8%, 8.42% interest, and that's a really great interest rate. That's compared to the fact that other CDs and other fixed interest rates are around 2.3 or 3% max. So anything more than that is a good investment means. So how long does an I bond earn interest? So let's say you put that money, $10,000 this year, and you never looked at it again. It will gain interest for next 30 years unless you cashed it out. So when do you get the interest on your I bond? The Series I bond, you will get your money until you cash in the bond. Can you cash in before 30 years? Absolutely. You can cash in or redeem your I bond after 12 months. So the first 12 months or the 1 year time period is frozen. You are not able to withdraw your money during that time. Anytime between 1 year to 5 years, if you redeem your cash during that time, you will lose the last 3 months of interest. Say for example, if you cash in your bond after 18 months, that means you will get the first 15 months of interest. So how do you find the value of your Series I bond over these years? You can always log on to your Treasury Direct account and you should be able to see what it is worth. So let's look at the interesting aspect now. Do you have to pay tax on these earns? Federal income earns? Yes. State and local income tax? No. You choose whether to report each year's earnings or you can wait to report all the earnings when you get the money out for the bond. Another caveat is that if you use the money for qualified higher education expenses, you may not have to pay tax on the earnings. So how much does it cost to buy this bond? If you are looking at an electronic bond, which means you directly log on to the Treasury Direct, create an account, and if you're buying electronically, then you can start with as minimum as $25. The maximum that you can buy is $10,000 per account per social security or an EIN number. For individual accounts, the limit applied to the social security number that's been registered. For paper bonds or the paper I bonds, it comes in as tiers. There is a $50, $100, $200, $500 or $1,000 bonds that you can buy. And you should be able to buy up to $5,000 in paper I bonds with your tax refund. So along with the $10,000 you can buy as a regular I series. Along with that, if you're using your tax refunds, you should be able to buy another $5,000 more, but that should be in the paper I bond mode. Better late than never. We still have 6.89 series for the next 6 months, and I think it's time for us to venture into it and see how it fits into your investment appetite. If you found this information helpful, let us know as comment below so it would encourage me to put more. And thank you for your time. Bye.